It's time for another episode of Let's Talk Business South Carolina, featuring industry outlooks, panel discussions on trending topics, and interviews with business executives, community leaders, and government officials. And now, coming to you from the Drum Creative Studio, here's your host, longtime South Carolina business publisher, Rick Jenkins.
Hello, everyone, and welcome to another episode of Let's Talk Business South Carolina. As always, I am your host, Rick Jenkins. I am glad you found us. Guess what, folks? We are up to episode number 50 today, the big 5-0, and so I'm excited about that. I'm glad you found us. Today, we're going to get the 2025 banking and lending outlook that's going to be presented by these two gentlemen right here, Dustin Green and Carter Hollis. They are market executives with Dogwood State Bank. But again, I'm going to get to those guys in a second because first, I want to thank our presenting partner, the legal firm Haynsworth Sinkler Boyd. Haynsworth Sinkler Boyd has been around for a long time, folks. They have been doing legal work in the Carolinas for more than 130 years, and they've got more than 110 attorneys that are stretched throughout the Carolinas doing work. And they have agreed to be our presenting partner on a monthly industry outlook for 2025. And we really appreciate those guys helping to make it possible for us to bring this type of content to the South Carolina business community. And let's now get to these folks. Dustin Green, Carter Hollis, welcome.
Thank you for having us, Rick. Yeah.
It is good to have you guys here. Dustin, you and I, we go back a ways.
Yes.
You were with County Bank.
County Bank.
Yes, 30 years.
First met, and
yeah,
you were GSA business at that time, and
that's right.
I guess time's kind of flown by 10, 15 years now.
Yes, that's exactly right. It's hard to believe. Carter, you and I just met for the first time here a little bit ago.
That's right.
And if I've got this right, you started with Dogwood State Bank not too long ago as the Greenville market executive, and over the last couple months, you have moved to more of a regional role, handling the upstate market, and then Carter comes in and fills the slot that you were in as the Greenville market executive. Do I have that correct?
You've got it.
Yeah.
You've got it.
I got it.
Yeah.
Give me that elevator speech.
Yeah. All right. Dogwood State Bank is relatively a new name to the South Carolina market. As you mentioned, I joined in the summer of last year, and we had just opened our office in downtown Greenville. We're right across from the baseball field on the corner of Main and Markley. So really happy with that space. We've got a full service branch there, and our staff there I think we have 4 commercial lenders now as well. So outside of that, we have also expanded and opened a new office in Charleston. If you're down in the Tri-County area, you've probably seen us. We acquired and merged with Community First Bank, which was a local bank here that had been headquartered and started here in the 90s. So with the expansion of that, we have 7 South Carolina offices now, kind of spanning mostly the upstate and then the group down in Charleston. So new to South Carolina, not new to banking. Started out in Raleigh about 6 years ago with a group that had intentions of starting their own bank and actually ended up merging and buying the charter of a bank out of North Carolina that had about 25-year history to its roots. So the combined scale of that now is about a $2.2 billion community bank. We absorbed the Community First merger in the summer legally and then completed the integration through the fall. I'll let Carter kind of give you a little background on how he got here.
No, absolutely. I mean, I would just add probably the biggest way that we invest in the community is by helping small businesses and companies with that kind of capital formation needs, loans, lines of credit, and then also have a suite of cash management products and services. That cost of that technology has been pushed pretty far down to kind of that community banking level, where we're able to offer all the bells and whistles and components that a Cadillac Treasury Services suite would be able to provide. So we're really a full service community bank.
All right, guys, good elevator speech. Glad to hook up with you again.
Yeah.
Good to see you. So let's get into the 2025 banking and lending outlook. You ready to go?
Yeah.
All right, let's talk some business here. Let's start out with the roller coaster ride that is inflation. COVID hit in March of 2020, and so it's hard to believe, but we're basically talking 5 years ago now that we've been on a little bit of a roller coaster ride. We won't talk through that whole ride. However, over the last couple of years, we have had inflationary pressures that have continued to haunt us a little bit, even though it's getting better. 2023, the Feds raised the rates 11 times, hopefully not 23 times. Raised the rates 11 times. Last year, they brought them down twice. Then they stayed flat. Now they might bring them down again. What's going to happen in 2025 with the rate?
It's probably a good guess, to be honest with you. But what we saw at the end of last year was interesting. They started to reduce rates. The prime rate, Wall Street Journal prime, is down to roughly 1%. The 1 month SOFR, which is a term you're seeing a lot now, replace LIBOR for most banks as far as an index we like to use to lend money against. That came down 80 basis points since that time. So I think the SOFR rate right now is around 4.3. The interesting part of that is you saw kind of a rush in that fourth quarter of folks wanting to get a business loan closed before year end and get a rate that, may be under 6 again for the first time in a long time.
That's right.
Or close to 6. You also saw a lot of people taking advantage of the mortgage market at that time, trying to lock in during it. What we saw after that was some more inflation data that I think, caused a little pause there. So you've seen the long end of that curve start to go up. So the 5-year Treasury, the 10-year Treasury are both up about 80 basis points in that same time. So, part of that we've seen is that a lot of developers, a lot of folks are taking a variable rate now and kind of betting on what's going to happen, assuming that we will have to see some downward trajectory over time. But I know you've had a few customers that have been kind of...
Yeah, I mean, just backing up a little bit, I mean, I think you could probably find an economist that's going to agree with whatever your prevailing thought is around inflation, right? If you thought inflation was really going to come down, there's probably a group of economists that would agree with you, or vice versa. I think the real inflation is still there. People really feel it in the overall economy and in the market. Certainly north of that 2% benchmark that the Fed kind of cites that they want to be below. They did have a couple of, 3 small rate drops. And you would think the 5-year and the 10-year treasuries would kind of, decline as that, rates kind of drop there. Is that certainly as inflation kind of was stepping down as well. And that just really hasn't been the case. You kind of look at that yield curve and it's kind of, has maintained that. And I think there's just, real inflation is still there. There's still some uncertainty with the overall economy. Maybe they're looking, maybe there's the thought around, potential more inflation, that's out there as well.
Let's talk about some economic shifts that'll continue to impact inflation. There's all kinds of stuff going on these days, right? There's all kinds of things going on, nationally and globally that could have huge impacts on inflation. It could go way up. It could come down. I don't know what it's going to do. All I do know is I think it's going to be a roller coaster ride through 2025. I think that the stock markets are going to see a roller coaster ride as they respond to things that are being said and done. What do you think?
I would agree. Stability will take some time. Obviously there's as you mentioned, a lot of things going on, new administration, there's some executive orders, there's tariffs. There's things, locally here that are happening. There's things in the Southeast that are happening that are not impacted in other parts of the country. But the thing about particularly the upstate in Greenville, if you look back over our last recessions, we've always been what I consider to be very fortunate. We're never too far down, never too far up. Now that's changed in the last few years as the upstate of South Carolina has got a lot of attention nationally. A lot of businesses are moving here. There's a shortage of industrial space. It seems like every time you drive down the highway, you see a new industrial building. So a lot of that may change, but, historically we've been okay, through these ebbs and flows. And at least what we've seen early on at Dogwood is there's not been a lack of demand.
Industrial seems to be hot. And of course, we're a manufacturing state. And so industrial real estate is often hot. Carter, what are you seeing?
No, I'd agree. I mean, industrial, that asset class has been pretty frothy for a number of years, right? And I think you're probably starting to see some cooling within certain segments of that market, meaning your large million square foot industrial space. It's just taking longer for some of that product to kind of lease up. Whereas you're seeing some of that shallow bay, 10,000 to 20,000 square foot product is still very much in demand. And so I think you could see that. I think there's aspects of that bleed into every asset class in the CRE space, whether it's retail or office.
Right. What about personal loans, lines of credit, things like this that are more personal in nature as opposed to from a commercial perspective? Up, down? What are the trends? What are you seeing?
Say the personal lending space is probably up a little bit. Everybody's having a little harder time making ends meet with their normal paychecks. Some people are having, you mentioned home ownership, kind of going back to that. If you need a new HVAC unit, that's a $10,000 type expense. That's not something that a lot of folks just have sitting aside for that. So that business stays pretty steady really in all of our markets. It's not really one of our main focus markets, but it's handled through our branches. And, we definitely like to take care and serve the communities that we're in. I would say that demand is pretty steady all the time. The banks, of course, like to find ways to try to collateralize that lending. We offer home equity lines, second mortgages. We also do auto lending and finance, things like that we feel like serves the average, individual in our community and takes care of them, even though that's not really the main focus of maybe a business banker. So.
Prices have been increasing faster than wages have been increasing. Wages have been stagnant for quite some time now. And as we all know, prices have been high for the last few years, even though evening out, but I have a feeling it's going to go higher. How does that impact your business, Carter?
It certainly impacts business. If you look at it, just higher cost, if you look at, you mentioned commercial real estate deals, right? Higher cost, whether it's borrowing, the construction cost, the design cost, they're having to deploy more liquidity into deals to make them work. So the higher costs have definitely impacted, what we do and what we see every day. On the consumer side, from a macro level, I think the consumer debt is at an all-time high. I think it's like $17 trillion, right? And to your point, that imbalance between wages and the wages haven't increased as inflation and the cost of just living has increased. And so that gap has been kind of bridged through consumer debt. And so that's certainly a bubble, troubling.
Guys, I'm going to get you out of here on this. I want to talk about trends, potential trends, both positive and negative, that might raise their head in 2025. And I want to start out with something positive. Carter, what do you see in 2025 that could be a trend that really positively impacts your industry?
I think just from an overall market, standpoint and looking at just kind of the overall health of the market, I think kind of the nearshoring, onshoring of more manufacturing that I think could happen over the next 12, 18, 24 months is a definite positive. I think increased spending in some infrastructure will be a definite kind of positive as well. Certainly like what you envision or hope for, like cross-border trade agreements can certainly help our overall economy and how much we have here in the upstate with international businesses. I think that could be a huge kind of lift for our overall market.
Dustin, what concerns you moving forward?
Well, we touched a little bit on it earlier. I think just the uncertainty is a concern. It's, a lot of clients that we have, a lot of business owners we talk to have been kind of waiting on stability. And it seems like, can't remember the word we used earlier, but it's kind of bumpy right now. So if you're waiting on, the perfect scenario in the economy, then that may take some time. Folks are going to need to begin investing in infrastructure. They're going to need to invest in, equipment, growing their companies, and hopefully not waiting on the perfect scenario. As you said, the interest rates we're charging now historically are not really that out of line. They're just kind of hard to remember from recent memory. when you were hearing 3% rates and now you're hearing 6s and 7s. It's a different feel. But I think that, and really we touched on it earlier too with the affordable housing. I think in our particular markets that we serve, affordable housing is a major need, and one that hopefully we can help address by working with some of these wonderful nonprofits we have here, finding ways to be involved and lend some money in that sector. I think we have to get that second one under control to continue recruiting top talent here. If companies are looking and they're interviewing students that are coming out of school from all over the country, you know, one of those questions is, can I afford to live? How will my quality of life be, et cetera? So I think those two things continue to be a concern, but there is a lot of optimism, as Carter said, around our industry as well.
You mentioned the word bumpy, and folks, I have to feel that the financial markets throughout 2025 are going to be just that. It's going to be a bumpy ride, but here's hoping that the trends look good and that your industry comes through it in good shape, because if your industry comes through in good shape, that means it's going to come through in pretty good shape for all of us. Folks, that was the Banking and Lending Outlook presented by these two guys, Dustin Green and Carter Hollis, both market executives with Dogwood State Bank. Thank you for joining us. We'll see you next time.